Hey guys, it's Max. All right, this is going to be a quick one because market closes in 25 minutes. So I can't talk too long because I have to post this in case any of you guys want to do this trade. I'm going to recommend, or I'm going to show you two different trades for Tesla. They have earnings today, a bullish one and a bearish one, but it's going to be along the same grounds as the Tesla. As the Trump Kamala arbitrage, where I'm going to show you how to bet on both and if it'll be worth it and how to allow for outliers. We're going to look at this the same way we looked at that. Okay, so here's the first thing we have to do. Just like we had to decide on the other one, what do we think is going to happen? Do we think this is a long vol? What I'm going to show you guys today is for somebody that just thinks volatility is going to happen. I don't know. It's either going to go up a bunch or down a bunch. I don't know which way. I think maybe down a bunch. Okay, that's what this kind of trade's perfect for. This is called a put ratio back spread. What you're doing is you sell a put. Look at this. We sold this put and make $17, but then you use that $17 to buy two further out of the money puts. See, in this case, we bought two puts that cost around $7. Okay, the 2 times 7 is 14, but we sold a put for 17. So watch, we do this trade for a credit. You could do this trade right now, have $210 in your account, have enough to maybe go to dinner. Things are so expensive anymore, but maybe you could take your wife to a moderately priced dinner somewhere. But the thing is, though, other than that, you don't have a lot of risk in the trade. If you're right and Tesla drops big tomorrow, it's down 15%. This option trade's worth $1,500, $1,700, whatever. Let's say Tesla drops 20%. This is worth $3,000. Tesla drops 25%, worth $4,200. So this would be if you're a Tesla bear, but you also think maybe it'll go way up also. Now, on the upside, you have what's called a consolation prize. I call it a consolation prize, where you make a little bit if it goes. You don't have any loss on the upside. So all you're trying to beat is Tesla not going anywhere. Okay, all you're trying to beat is an announcement, and it's up $2 or something. That's what kills the strategy. Okay, so that's for the Tesla bear. This one right here is the same trade except with calls. You could also do it for a credit. You sell the 200 call in this week for $19.10. It's holding a shitload of premium because of the earnings. That's why it's so expensive. That's what's making this trade work. That and the fact that we have free commissions. Trades like this never would have worked when I was a broker because of the commissions. Or even maybe 10 years ago, they would have been less attractive. But nowadays with free commissions, you can do stuff like this. So you look at this one. So you turn around, you take the $19 you earn, and then you buy this option for $7.85 twice. You buy twice as many. That's why it's a ratio back spread. But you don't spend as much on the ones you buy. So you do this one for a $360 credit. So you could definitely take your wife to dinner on $360. All right. And so now this one is if you think volatility is going to happen, but you think it's probably going to be on the upside. Tesla, you know how they are. They're probably going to blow out earnings and be up 15 or 20%. Anyway, there's no upside to what you can make. This is the equivalent of having 100 shares long. Is what this is over the strike, which is 217.50. So I mean, it's just like having 100 shares of Tesla. If it goes to 317, you make whatever you make. All right, or see, it's the equivalent for options. So on this one, same thing. You're just trying to beat it. You're just trying to beat a non-move. If it goes nowhere, that's what messes you up. Now, what you can do if it goes nowhere is as soon as the market opens in the morning. If they announced it and the stock's not moving, it may not have dropped all the way to the bottom of the valley of death yet. You're just trying to beat the valley of death. You might be able to get out instead of costing you the whole, $1,300, you can maybe get out for half or something. Because the problem is, right as soon as the announcement comes out, guess what else is going to happen? Volatility is going to collapse. Boom. So we'll knock volatility down 50%. And so that's realistic. You could maybe get out for $800 or $900 loss. So that's your risk. You're risking $800 or $900, but you basically have 100 shares of Tesla long. If they hit earnings, and they've done it before and they're up 25 percent tomorrow or something, you have a $3,700 winner. And the best part is you earned a credit to do the trade, and you still get that 360 is yours to keep. You know, you, like I say, go take your wife to dinner or whatever. All right, so I'm gonna load both of these trades in case anyone wants to do it. I wouldn't try both of them together. Just decide which way you think it's gonna go, and play that way. If it goes the other way, you have a consolation prize where you'll make something. I know it's tempting to play both of them together, and I've looked at the math of it before, and it just doesn't work. Just play one of them, and it's the same thing as the Kamala Trump trade. If you're 60-40 that Tesla blows out earnings and they're up huge tomorrow, obviously you're going to play this way, but you can use the same decision matrix, and you can put there, I think there's a 60% chance I'm going to make $2,000 but a 40% chance they miss earnings really bad. But in that case, you would still make money, because a big miss also makes money with this strategy, right? And then your outlier in this strategy is a non-move. And then you could put, like you could say this is a 10% chance, figure out this is a 10% chance of losing 900. Anyway, you could use the same math like we used in the other one to figure this out. So anyway, good luck. Let me know what you guys do. I'm going to go post this right now. All right. See ya. All right. Sorry about that, but turn on that color. You could have left the stereo on. The music sounds cool in the background. It just sounds like I have